Is the energy consumption going to impede the further popularization of crypto assets?
No. I would love to stop there, but I'm going to unfortunately go on a bit of a rant. I think you should read Nick Carter, who writes about this extremely well. The reality is, if you look at the energy consumption of Bitcoin in a vacuum, you get the kinds of hard articles you see in The Guardian. If you think about the energy consumption of Bitcoin, comparing it to gold mining, all of a sudden you realize that, well, wait a minute, or as you would say on your side of the pond, hang about, it's actually dramatically lower compared to its monetary value. And as Bitcoin's price increases, that could be orders of magnitude less. If you further compare the energy consumption of Bitcoin to the energy consumption of all the computing power used in the fiat financial system, you start to realize, wait a minute, I've been had. This is one of those arguments that is a clear shell game argument. It is a clear logical fallacy. Yes, Bitcoin is mining and when mining of Bitcoin happens, it's transaction validation. That is how Bitcoin mining happens. People, the neophytes that are watching this might think mining is you're going out to hunt Bitcoin. No, that is not what's happening. What is happening is you have a competitive network of people in a truly competitive environment looking to validate the transactions and ensure the integrity of the Bitcoin network. That network validation of transactions is where mining is happening. Every analysis I have seen shows that the environmental consumption of Bitcoin net compared to what it could become is very, very small. And yet, even with that, there are various layer 2 solutions coming online, which will bring it down substantially more. So no, I think it is a red herring argument. I thought it's a red herring argument for many times. And it's particularly red herring when you realize how much of Bitcoin mining is being powered by electricity sources that are renewable. Or even better, like flared natural gas, basically wasted energy that couldn't be used for anything else because the transmission cost of getting it other places is prohibitive. And by the way, anyone who knows anything about greenhouse gases knows that methane is substantially more greenhouse creating than carbon dioxide. So letting natural gas into the environment is not a very good thing either. So a balanced view of this would say no, and say no in spades. So sorry for the rant, but happy to set it straight.
How do you see the possibility of more complex derivatives being developed using Bitcoin as the underlying, and the possibility of smart contract use?
I think that's a great question. And once again, I want to de-link those two. Smart contracts, I think of more from other ecosystems, whether Ethereum or developing chains like Polkadot or Cardano, if you believe in that, etc. But let's go back to derivatives. I think derivatives are a very important tool. We've already seen in 2020 and now into 2021, increasing adoption among corporates for Bitcoin as a treasury asset. As that happens, the need for hedging strategies into the future starts to grow. You will start to see the need for more balanced hedging strategies and derivatives. Now, not being an expert in derivatives, but having been adjacent to derivatives my entire career, what I can tell you is that the volatility today of Bitcoin is not remotely normally distributed. It doesn't follow a Black-Scholes model type style, meaning that because of speculation, the date skew as well as the skew of probabilities is such that it's harder to model. There are many people smarter than I am working on exactly those problems today. And it's really important to understand that when one starts to value the need to be able to trade in and out of crypto, which is why we care about it so much at CoinRoutes.
David Lester, no less, puts you on the spot, actually, at this point. Dave, buy or sell?
So the value of Coinbase that will be determined is how well does their management team execute. If you believe in their management team, then they are a buy, certainly relative to other stocks. If you believe only in the margins of what they're currently doing and they sit on their hands, then they're a sell. Personally, I have friends who are on Coinbase's management team. So without a huge amount of conviction, I would say they are a slight buy relative to other stocks. But look, if the S&P falls, they're going to fall. If the tech sector falls, they're going to fall. If they both rally, I think they will stay in line with that, because that is what they're doing. But it really, really depends upon how well their management team executes on their vision of monetizing their retail environment, retail client base, and maintaining their vertically integrated stack throughout custody as the crypto market continues to grow.
How do you manage to see the world? How does this world pan out? And how soon do we get to infinity and beyond?
Well, I don't know about soon. I've been very good in my career at predicting meta trends and very bad at predicting timing. As Rich knows, because we started early in the world of automation and trading, we both knew that trading would be fully automated, and it took way longer than we would have expected. I further think that stock trading will ultimately all trade the same way that digital assets trade today. Why is it you can only buy Tesco in pounds sterling on a UK exchange, and maybe you could trade a GDR someplace else in some other currency? Why not be able to trade the same stock in euro or dollars or Bitcoin or Tether for that matter on the same platform? Those sorts of evolution, that becoming digital, that's what it's all about. And that's what we're at the center of.